Joining us now to discuss BTC price and more is CoinDesk markets analyst Damanick Dantes in New York. Hi there, Dantes. Always great to see you.
Hey.
So, Bitcoin is looking a lot like a tech stock these days.
Yeah. The correlations are now the highest in about a year. I have a chart here showing the Bitcoin 90-day correlation with the Nasdaq 100. That's right above 0.5, still fairly neutral or low. But in Bitcoin terms, it's the highest in about a year. We saw the elevation around 2020. Remember that March 2020 down cycle when you had the pandemic-induced recession? That basically put all risk assets in the same bucket. But then since then, we've held on to that correlation. So we're definitely moving like the average tech stock. And I remember the last week when I was on here, we showed the correlation with meme stocks, and that was extremely high. So those stocks tend to pump the highest in the equity market, and you're seeing the same thing in the crypto market as well.
What about Bitcoin being an inflation hedge?
No, I don't see the data supporting that. It hasn't traded as an inflation hedge. For a store of value, you need to have minimal volatility, for it to hold its value over time. In an inflation environment, we haven't been through that yet, so we haven't seen any data to confirm that. And you also want something to be kind of stable without that volatility. So we've seen during times of better than expected inflation prints, over the short term at least, those traditional safe havens like gold and commodities have retained their value and outperformed traditional markets and other risky assets.
In the meantime, the Luna Foundation Guard is continuing to buy Bitcoin. Is that having any impact on the markets?
It kind of did, heading up towards that 48K level. But again, stocks were doing the same exact thing. So it's very hard to pinpoint the exact source of that return. But then lately, I think the Luna Foundation Guard has slowed its pace of purchases. So that kind of, probably triggered some of the sell-offs that we've been seeing as of late. But probably, I think they still got some money left in their reserve to accumulate more. I would assume that they're probably going to do that along price dips, given the large amount that they've got left. And that's probably the prudent thing to do. You don't want to keep buying on tops. You want to buy on dips. So we're probably going to see that going forward.
All right, let's take a look at the options and futures markets. What is the sentiment among traders?
Pretty bearish. So this options market has been bearish for a while. Down here, you see the volatility skew. This basically just shows that put options are more expensive than call options. And then the implied volatility along that downtrend just shows that there has been less sort of encouragement to make a directional bet on the market. So at least they're buying downside protection, which to me just says that there's a high amount of uncertainty. When you've got sort of implied volatility low, you're stuck in this year-long range. You don't really know where the price is going. And we're faced with this unprecedented macro and geopolitical environment. So as traders want to adjust their positioning, what they're doing at the very, very least is just buying downside protection. And that's what we've been seeing here. Unlike previous cycles, especially when you look at the funding rate, the cost to fund long positions in the Bitcoin perpetual swaps market, that's been fairly neutral to negative. So in prior up spikes in the price, you've seen those funding rates go at extreme highs. That shows extreme bullish sentiment. So we haven't really seen that extreme speculative activity. These moves that have been 20% upswings, 20% downswings have been very spot market driven. And you really haven't seen the leverage pick up to build conviction on the upside yet.
All right, so a lot of uncertainty out there. And so in terms of looking at support resistance in the short term, what are you seeing?
Short term, we got oversold over the past few days. Per the DeMark indicators, that just shows a price exhaustion, which is counter to the prevailing trend. That flashed earlier today. And that was very similar to the signal that I got in January of 24. That was around the price low around 33K, and that preceded a 30% upswing. This time, however, the monthly MACD, or the momentum indicator, has flipped negative, unlike what we've seen in prior months. So that tells me that there is probably some area for the range to continue, albeit within these 20% upswing or downswing. So that gives some ability for short-term traders to position themselves. That target resistance is still intact around 50.9K. We've approached there somewhat around the 48K level. That's around the 200-day moving average. And that encouraged some buyers to take some profit, which we've been seeing there. That oversold indicator at the bottom is the relative strength index, and that's the most oversold that we've been since late February. There has been a consistent pattern within BTC over the past 3 months where we've got negative performance in the first half of the month and then positive performance in the second half. Right now, we're about April 13th. We're almost at the halfway mark, and seasonals are positive within April and May. So you can see that oversold bounce probably pair some of the earlier losses that we've been seeing at least. Over the long term, upside is fairly limited, and it's a very same picture for risk assets like equities as well.